Okay, Bill Soriano here from Pittsburgh. I wanted to make a quick video for you today showing you a effective scalping strategy that you can use um, on the 5 minute time frame. So the 5 minute time frame is really the only time frame I've tested this on. So that's what I'm going to show it on. So it's a very easy strategy to understand. And once you watch this video and look at the Google Doc that I've prepared for you, you'll be able to start taking trades right away using this strategy. Excuse me. So, if you want the link to this Google Doc, just message me and I will send you the link. So again, this is the 8/13/21 EMA pullback strategy on the 5 minute time frame. And so with my strategies, I don't like to use a lot of indicators. I don't like to clutter up the chart with a bunch of indicators, but for this strategy, we do need to use EMAs or exponential moving averages. There is also one other indicator that I use, that is our communities indicator, and I'll give you more information on that later on in the video. So basically you have the 8, 13, and 21. You may say to me, Bill, why did you pick 8, 13, and 21? I'm kind of addicted to the Fibonacci numbers and the whole Fibonacci thing as it relates to the universe and everything else inside of it. And so these particular moving averages are Fibonacci sequence numbers, 8, 13, and 21. So we have them on there, and we also have to add the 200 EMA as well onto the chart. And so this strategy is not a multi-time frame strategy. You don't need to check anything on other time frames. You're just going to use it on the 5 minute time frame. I'm sure that it'll work on the 15 minute or even lower time frames, but I haven't used it on that myself. I like the 5 minute. So the trend rules are, you just want to make sure that you're taking trades with the trend as it relates to the 5 minute chart. And so we're going to add the 200 EMA to the chart for the trend direction. Basically, for a buy, price must be above the 200 EMA. The 8 needs to be above the 13, 13 needs to be above the 21, and all three need to be trending up with space in between them. For a sell, it's just the opposite, obviously. Price needs to be below the 200 EMA. The 8 needs to be below the 13. The 13 needs to be below the 21, with all three trending down and space in between them. Now, to enter a trade, you first need a valid pullback, and then you'll need to identify a trigger candle during that pullback. Okay, now for a buy, the 8, 13, 21 EMAs are trending up, like we're saying. We need a down candle to close in between the 13 and the 21. So that's why we're using these three moving averages, 8, 13, 21. And I'm going to show you this in a second here on the charts. But if price closes below the 21 EMA, at any time before taking the trade, then that particular setup becomes invalid. Okay. So let's look at this first before we go on with any more of the rules here for this trading strategy. So let me just pull up a pair here in Trading View. Let me go to UJ, USD, JPY. And so here, what we've seen here on Friday, this is Friday's price action. Today's Saturday, August 24th, 2024. So this was from August 23rd, 2024. And what we see here is what? We see that this line here, this gray line, is our 200 EMA, and we're using that just to determine the trend direction. So since price is below that, we only want to look for sells. We don't want to look for any buys, okay? So the red line is the 8, the green line is the 13, and the blue line is the 21. So we always need the red, the green, and the blue. For a sell, we need the 8, which is the red, to be below the green, which is the 13, and we need the green, which is the 13, to be below the blue, which is the 21. Okay, so you see how price is coming down. Then right here, price closes above, in between the 13 and the 21, and it does not close above the 21. Okay, so had this candle closed above the 21, that would have invalidated this particular pullback. Okay, and we would need to wait for another one. But since it did not, this is a valid trigger candle. We're calling this a trigger candle. Okay, so in a downtrend, we're looking for a bearish candle to close in between the 8 and the 21 EMA, right? This is our trigger candle right here. Just put an arrow right there for you. Oh, put an arrow right there for you. That's our trigger candle. Now, these red and blue triangles on here, this is our proprietary community indicator. Again, I'll give you more information on that later, but that's what those are. That's the only other indicator that's on the chart here, as you can see. So now we've identified a trigger candle in a downtrend, right? So let's go on and see, right? Let's look for, so now we're selling. So down here, after identifying the trigger candle, right? And again, for a sell, the 8-13-21 EMAs are trending down. You then need an up candle to close in between the 13 and the 21. If price closes above the 21 EMA before entering a trade, then that setup or that actual pullback becomes invalid. So again, like I said, we have the 8. We're below the 200. We have the 8, the 13, the 21 all trending downward with space in between them. Now, of course, as it starts to pull back here, that space is going to get smaller, okay? But initially, we have the 3 moving averages moving down and fanned out with some space in between each of them, right? Now, here's our pullback. Our pullback gets identified by this trigger candle right here, which closes in between the 13 and the 21. So now how do we decide to enter a trade? Well, we have 3 ways that I have 3 ways that I show you here to enter. Okay. The first way you can enter is if price now closes back below the 8 EMA. So in that case right here, this very next candle closes back below the 8 EMA, which is the red EMA. So you can actually enter at the close of that candle. Now you have to wait for the candle to close to make sure, but this is one way to enter the trade. You wait for that candle to close right there. Okay, so now you see here, where are you going to set your stop loss, right? So I have that in here as well. So to set your stop loss at the high or the low of the trigger candle right here, use to enter a trade plus or minus 2 pips. So in this example here, you would put your stop loss at the high of the trigger candle, which is right here at 144.978, and then you would add 2 pips. So essentially that would go at right around here, 144.998. So you add 2 pips to account for the spread. Okay, that's all you're doing there. You're just adding 2 pips to account for the spread. Now, 2 pips is usually enough, but if you are trading a pair and for some reason the spread is higher than that, then you would want to adjust that to whatever that spread is. If you're trading a pair and you see that the spread when you're entering the trade is 3 pips, then you would need to adjust that to 3. But for most pairs and for most times during the day, 2 pips will be enough on the 5-minute chart, okay? Now, obviously, if you're on a higher time frame, then that may be different. Okay, so we're in the trade here. Our stop loss would be up here. And of course, you could see we get a big move down here. Lots of profit on this trade that we could have gotten. Now, what's another way to enter the trade? The other way to enter this trade is by using our community's custom indicator. Now, in this case, this is our indicator right here, and it is giving us this red triangle, which is a sell signal right here. So if we would wait for our community's custom indicator to go off, we wouldn't get as good as an entry, right? So we would have a bigger risk here by pips. And so we would have less of a profit, but you can see here that even if you get in at the close of this candle and your stop loss again going 2 pips above the trigger candle, this is still a very good trade, right? Now, the third way that you can get in, so let's just go back here. And again, if you want this document, just let me know. Contact me on Facebook or send me an email, however you need to do it. And I will, don't comment below this video because I don't always see the YouTube comments. So again, price to close back below the 8, use the community indicator. And then the third way is simply to count 5 candles back and take the trade when the low of the prior 5 candles is broken. So what that means is, here's our trigger candle. So we count 5 candles back. 1, 2, let's make this bigger here. 1, 2, 3, 4, 5. This is the 5th candle. And we would enter this trade right here when price breaks below the low of the prior 5 candles. So basically we would get in on this candle right here. And again, that's a very good trade. Now, what happens if this assumes that you're able to watch the charts, right, and manage your trade? So what if you're not able to do that? What if you identify this setup and you have to either leave, go to work, you have to run some errands, or it's time for you to retire for the night and go to bed? What you could do is you could set a limit order, okay, at that area there, and you could leave the house, do whatever you want to do, go to sleep, and then you would set that limit order at the same time. You would set your stop loss and your take profit, which I'll show you in a minute. And then you could leave and you would have gotten in that trade probably on that same candle there, right? Now, the only downside to this is, the only downside to setting the limit order is if price comes back up here and closes above the 21 before that limit order executes, right? Then, you have no way to know that because you're not at the charts. So placing the limit order is not the ideal way to do this, but if that's the only way that you're able to find yourself taking trades, then that's something you may have to do. I may use this. I use this from time to time because I can only trade during the Asian session. I own a restaurant. I'm there during the day. So all of my trades can only occur during the Asian session unless I'm setting limit orders or stop orders. And I'm sorry, by the way, that's not a limit order. That's a stop order. Okay. So please let me make that correction. I just thought of it here as I was talking. So I will change that in this here. It's not a limit order. That is a stop order. Okay, so let me change that there. You just see, sorry about that. I was just saying that out loud and I was saying it. I realized I made a mistake. Set a stop order. So it's not a limit order, it is a stop order. So in this situation here, you would set a sell stop order at 144.744. And when you set that, you would also set your stop loss and take profit before you leave the charts or retire for the night. So again, guys, it's a stop order, not a limit order, okay? So a stop order, what's easy to remember for a stop order is you're taking the trade as price is moving in your direction, right? A limit order, you're taking the trade when price is pulling back, okay? So it's going the opposite direction of the way you want to see the trade go. Okay. In this case, we have to use a stop order, not a limit order. So I did fix that in the Google document, and I did make that document pretty fast. And sorry for that mistake there, but it is a stop order. So either way, with all 3 scenarios, all 3 entryways, this would be a very good trade for you to take. Now let's show you. I think maybe there's another one I have here. Wanted to show you a buy. This was in GBP USD. This was actually a trade that I did take. Let me see here. Okay, so I don't know what this, let me just See if I can get rid of that line right there. Okay, so we could see here that price is above the 200-day. And so we have the 8, the 13, and the 21. That's the red, the green, and the blue trending upwards. And see how price, now we're looking for a red candle, a bearish candle to close in between the 8 and the 21. But you see here how it closes below. So that invalidates that pullback for us. Okay. So essentially, we would have to wait for another one. I'm trying to see where I actually got in this trade, and I believe it was actually prior to that. So if you see right here, this red candle right here closes in between the 13 and the 21. Now, it doesn't close below the 21, although it looks like it does. Let's see here. Where am I? Second here, guys. One second here. Okay, so I think I'm back on here. Sorry about that. My mouse, the battery went out and it just stopped working here. So anyway, right here, it's very close to closing below the 13, the 21 EMA there. But as you can see here, if I put my cursor on that candle and you look over here on the EMAs, you could see that the blue is 130973. And if you put the cursor on the bottom of that candle there, it's basically right at the exact same spot. So I looked at that. It almost closes below, but it doesn't. So it's a valid trigger candle. Okay. And for a buy, right, again, for a buy, price needs to be above the 200 EMA, which it is right here. The 8, which is the red EMA, needs to be above the 13, which is green, and the 13 needs to be above the 21, which is blue. They need to be trending up with some space in between them, which they are right here. Then we get the pullback. Now, if that candle did close below the 21, then that would invalidate this setup or invalidate this particular pullback because it went too far. So since it goes too far, we don't know if price is just going to keep going or what. So that's one of the ways that we stay out of bad trades using this strategy. Okay. But since price closes right on that EMA line, this is still a valid setup. So how can we enter this trade now? Right? We have 3 ways to enter. One is we can wait for price to close above the 8, which the very next candle does, right? So we can get in the trade that way, right? And you could see our stop loss would basically go 2 pips below the low of the trigger candle. Now the wick low on that trigger candle, if you look over to the right here, is 1.30967. So our stop loss would go 2 pips below that, or 30965, somewhere right around here. And then you could see we get a very big move up, pulls back, moves up again, pulls back, moves up again, right? So look at the move up that this thing makes. It's just incredible, okay? And so that's from this area right here. So that was Thursday night at 9 p.m. Okay. So that's the one way to get in. Now, what's another way to get in? Well, you can use our communities indicator. Okay. And see right here, we get this blue triangle. That's our community indicator telling us that it's now safe to take that trade. So we're going to take that trade at the close of this candle. You always have to wait for the candle to close to make sure that it closes above the 8 in this situation, or to make sure that our indicator stays on. So this indicator doesn't repaint, okay? But as the candle is active during the 5-minute period, it will go on and off based on price action. Once that candle closes, if the indicator shows up, it stays there forever. If it doesn't show up, it never will, okay? So that's our second way that we could have taken this trade. And again, the stop loss is always 2 pips below. For a buy, it'll be 2 pips below the low of the trigger candle. Okay, regardless of the way we enter, the stop loss is always in the same place. Okay, now the third way we can get in is what? We can count 5 candles back from the trigger candle. 1, 2, 3, 4, 5. We use this high right here, right? The 5 candle high, and we would enter that trade, market execution, right? As price is moving up above that high, if we're able to watch the charts. Now, if we're not able to watch the charts, we do have the option to set a limit order there at 1.31016. And again, our stop loss is still 2 pips below the low of the trigger candle. We would have gotten in the trade there. And either way, we have a big move up, right? So that's just 2 examples. One of those trades I actually took. So I have been testing this strategy for a while, but I've only documented it for the past 2 weeks. Okay, so what I do is I like to test out a strategy, and I like to test it for a few weeks, like, or a month, at least a month usually. And if it looks okay to me, then what I'll do is I'll start documenting it. So basically, what I'm doing is I'm just, when I say I'm testing it for a month or two, I'm not actually waiting that long. I'm just back testing it. I'm going back in the charts. I'm looking to see, okay, what have worked here? What have not worked here? And then if I see that it's a fairly decent strategy, then I'll start documenting it. So I have documented the last 2 weeks here, and I can give you access to this document as well here. And basically it just shows that the first week I was primarily using the one entry strategy where you wait for price to move back above or below the 8 after you get your trigger candle. And doing that, I did get 2 wins and 3 losses. Okay, so that is good, because remember, our risk to reward is mostly, a lot of times it depends on when you exit the trade. And I'll talk to you about that in a minute. But these 2 winning trades and 3 losses, and the 2 winning trades would have gone to a 1 to 4 had I stayed in, and a 1 to 8 had I stayed in. Okay. Now this is the time of day. You can see, like I said, I only can trade during the Asian session. So these times are all during the Asian session, Eastern time. I'm in Pittsburgh, Pennsylvania. And then these are links to the actual image that you can click on these links, and you can see the actual image of the trade that I took. Now, the next week or last week when I tested this, you could see this is a week starting 8/11/2024. This was last week starting 8/8/2024. And we had all 5 wins that week. Of those 5 wins, 2 of them would have went above a 3 to 1. Okay, so the reason why your risk to reward will vary on each trade is because, let me go back to the document here. What we want to do is when we enter a trade, right, we're setting our stop loss at the higher or low of the trigger candle, right? It's going to be the low of the trigger candle for a buy minus 2 pips. It'll be the high of the trigger candle for a sell plus 2 pips. Okay. Now, the initial profit target you set when you enter that trade, after you set your stop loss, you set your take profit at 3 times your risk. So if your stop loss was 10 pips, right, the difference between your entry and 2 pips above or below that trigger candle, high or low, then if it's 10 pips, then your initial 3 times risk reward would be a 30 pip take profit. Okay. Now that's how you would set it. Okay. Now, if you're not going to be able to manage the trade, this assumes that you're able to watch the trade and manage it. If not, if you're going to have to leave the charts during the trade, or you're going to have to retire and go to sleep, then I suggest you just set it at a 2-to-1. So, or a 1-to-2 actually. So you're going to risk 10 pips to get 20. So instead of risking 10 to get 30, you're going to try to get 10 to get 20. Okay. Because you're going to bed, you're not going to be able to watch the charts. The reason why you want to be able to watch the charts, guys, is because once you're up 1 times your risk, you're supposed to close half the position and move the remaining half to break even. Okay. So if your initial risk is 10 pips, you set your take profit at 30, 3 times your risk, right? You watch the chart. Once you're up 10 pips in the trade, you close half of the position and you move the stop loss to break even. Then you let the trade run to get to your 3 times risk target. Okay. That's how you do it. Now, if you can't continue watching the trade, you have to go to bed or leave the charts for whatever reason, go run errands, go to work, then you would have wanted to just set it at 2 times your risk or 20 pips. Okay. This way, guys, you're risking just 1% of your account, and you're normally getting anywhere from a 1.5 to a 2% risk to reward on your winning trades. Okay. So again here, stop loss set at higher low of the trigger candle used to enter the trade, plus or minus 2 pips, right? So in this case here, this was the trigger candle, right? Since this was a buy, we would have set our stop loss at 2 pips below this trigger candle. Doesn't matter which of the entry methods we use, the stop loss always goes in the same place. Okay, once you're up 1 times your risk, you close half the position, move the stop loss to break even, let the remaining half run. This assumes you're able to watch your trade and manage it. If you must leave the charts or have to retire for the night, then you should just set your take profit at 2 times your risk instead. So if you haven't been up and you haven't closed any part of your trade, you just set it at 2 times your risk. If you did get, if you did move your stop loss to break even, then you can just let it run to 3 times your take profit, or it will go back down to your entry and you'll get stopped out at break even. Okay, now the only reason to close the trade early is if it's 4 p.m. on Friday. We don't want to hold trades over the weekend, 4 p.m. Eastern time, or there's high impact news coming out and you're already up 1 times your risk. That way you could just close it. Otherwise, you can close the trade, or you can just remove the stop losses until news passes. Okay. Now, this can result in a bigger loss than expected sometimes. So I don't suggest you do that unless you're a more experienced trader. Also, you should always be checking for news first. And you shouldn't enter any new positions when there's medium or high impact news coming out in the pair that you're trading, unless you see you have enough time to let the trade develop, right? So, and again, when you have US dollar news coming out, that affects every pair across the board. If it's not US dollar news, if it's just Australian dollar news or the yen news, then you just have to worry about those pairs that include those currencies. Okay. Again, medium and high impact news, not just high, medium and high. Okay. So if you're sitting down to look at your charts and it's 7 p.m. Eastern time, and you look and see you have USD news coming out or dollar news coming out at 8 p.m., you don't want to take any trades because you're not going to have enough time for them to develop, and you're going to have to exit them. Okay. So that is the strategy in and of itself. Now, again, if you'd like to find out how to get access to our community indicator, let me know. I'll send you information on how to become a customer of our community. You'll get all kinds of live training, 5 days a week. There's at least uh, 20 sessions that you can get on each and every day. And you'll get access to all of our company's scanners, and a lot of people don't like to use scanners. Our community actually has several different ways that you can use our impulse scanner, we call it, to identify scalping setups in the market, and other setups in the market as well, smart money and scalping. But that's available for a cost, obviously, to join our community. They have lowered the prices, though, recently to make it more affordable for more people to get the training, right? So if you want access on our community, that will give you access to all our company scanners, all of our company's live training sessions throughout the week. And you'll also get this custom indicator that I showed you here. So let me know if you want that. If you just need access, again, with this strategy, guys, you don't need to pay for anything, okay? I gave you two different entry models, not using our community indicator here. So you had two entry models that you can use absolutely for free. So you can use this, you can do this strategy starting on Sunday night when the market opens, absolutely free, okay? But if you do want access to this indicator, and by the way, guys, just to let you know, these 5 trades that I took last week were all taken using the indicator for entry, okay? So they were all winning trades. These trades the week before that were a mix of price moving back above or below the 8, or price moving above or below the high of the prior 5 candles. So if you're interested in anything, let me know. But otherwise, this is a great strategy you can use. I will put the link to this Google document, right, in the description of this video, along with my contact information. And I'll also put the link to this spreadsheet right here as well. So you'll be able to see my trades as I take more trades in the coming weeks. Have a great night, guys.